and welcome back. Thank you so much for joining me in today's video. This is actually my favorite video I make for you guys because this is based on my own analysis of Realtor.com's data. They actually just announced this report here yesterday at the time of filming this video here. And this is the actual report, which I did not read. Instead, go to realtor.com/research/data and click on this link right here, which takes you to this really fun Excel spreadsheet, which you guys all know I love Excel, right? Anyways, let's have a look at this because the most recent week we have is for the week ended April 29th. And I'm going to talk about asking prices, housing inventory, new listings, days on the market, as well as the number and also the share of price drops compared to years past here. I'll also share a summary at the end of this video here with some kind of predictions of what may lie ahead as well. Let's first talk about asking prices in the US, because last week it only increased by 2.4%, which is equal to last week's level, a gain of 2.4% year over year. And by the way, this 2.4% increase compared to the same time frame of 2022 is actually the lowest price gain we've seen going back to May of 2020. And just for comparison's sake, during this same week of 2019, obviously pre-pandemic levels, we saw a gain of 6.9% year over year compared to 2018. Whereas this year, we saw a gain of only 2.4%. Now, here's another interesting trend we're seeing right now as well, because for the past 20 consecutive weeks, we've been seeing single-digit increases of asking prices in the US, less than 10% for 20 consecutive weeks. Now, the significance regarding this is that for the previous 50 weeks, we saw increases of more than 10% year over year. But this year, every single week has been a gain of less than 10%. One more thing I do want to mention regarding prices or asking prices is that this number right here is likely to be negative in the next 1 to 2 months, given the fact that prices were absolutely skyrocketing at this time last year, whereas this year we are seeing an increase, but not nearly at the same rate we saw back in 2022. And of course, stay tuned for that, and I'll definitely keep you posted with the latest developments regarding that. But I should say though, home prices or home sold prices are still down year over year, but asking prices are still up a gain of 2.4%. That's probably why the share of price drops is much higher compared to the past couple of years right now. So interesting trends. Anyways, let's look at housing inventory numbers because according to Realtor.com, inventory actually increased by approximately 35% year over year. So approximately 35% more houses for sale right now compared to the same time frame in 2022. Look at this though, because the increase has actually been decreasing. So in other words, we have more houses compared to last year, but the gap between this year and last year is actually narrowing here. So compare this to the middle of February, we had a 68% increase of housing inventory. Now it's only an increase of 35%. So as a note right here, inventory levels have been mostly on a downward trend ever since early February this year, mainly due to a lack of new listings. In other words, it's not filling up the amount of houses for sale in the US. Also, one more thing I do want to mention regarding inventory levels is that the gain of 35% that Realtor.com is reporting is actually a little bit less than AltusResearch.com. So for example, based on my own analysis here, inventory levels have increased by 47% year over year according to AltusResearch.com. There's a few things I do want to touch on regarding this because last week when I made this video, that was an increase of 52%, whereas this week we only saw a gain of 47%. On top of that, inventory has been on a downward trend since November last year, despite increases on a year over year basis. However, though, we did see a small increase of housing inventory over the past 2 weeks. I'll share that with you guys here in just a little bit though. But as a note right here, inventory decreasing in the winter months is entirely normal, but it's absolutely abnormal to see decreases of housing supply in March and April each year. And that's exactly what's been happening this year, which is entirely abnormal due to the giant decrease of new listings that we've been seeing here. So for example, we have 47% more houses for sale right now compared to 2022 based on altosresearch.com. However, though, we're still up by 52% compared to the same week of April of 2019. So here's a look at inventory levels according to Altos. Right now, we have far more houses for sale compared to 2022 and 2021, but we still are below levels in 2020 as well as 2019. So approximately 50% fewer houses for sale compared to 2021 and approximately 2022, and also approximately 50% more though compared to May of 2018. So having said that, look at 2019. Inventory levels started to increase in March that year. 2019, we saw an increase of inventory levels all the way until we hit approximately August of 2019. But inventory levels were increasing starting in March and of course in April through the summer months or the early summer months. This year, entirely different though, because inventory levels have been decreasing through the middle of April. We only more recently saw increases of inventory levels over the past 2 weeks here, going from 405,000 for the 7 days ended April 14th to 414,000 the next week, and then increasing again to 422,000 for the week ended April 28th. So obviously, if you're a home buyer, this is a positive sign because we do want to see inventory levels increase to subdue those price increases that we have been seeing here. But this is obviously a very short-term trend, and of course, I'll definitely keep you posted with the latest developments. As I mentioned in previous videos, the reason why we're seeing a lack of house inventory, historically speaking, is this right here. Inventory levels have been decreasing more or less because we're seeing a lack of new supply hitting the market. In fact, last week, new listings decreased 22% year over year. They also have been decreasing by double digits in 37 out of the past 40 weeks, which is absolutely insane. This is also the 43rd consecutive week of year over year declines dating back to early July. So 43 consecutive weeks in which new listings are down compared to the same time frame of 2022, nearly 1 year. Now, despite this, there's approximately 35% more houses for sale. However, though, historically speaking, we're still down by approximately 52% compared to pre-pandemic levels. Regarding how fast or how slow houses are selling, according to Realtor.com, it's taking about 18 days longer to sell a house compared to 2022 at this time. Also, houses are taking longer to sell compared to last year for 39 consecutive weeks. Again, though, a friendly reminder, this is a lagging indicator because this is based on closed home sales. All right, changing gears slightly here, let's talk about the number of price drops compared to 2022. Because last week we saw a big decrease in the number of price reductions. So the number of price reductions only increased by 40.2% last week. Compare that to just 5 weeks ago. We saw a gain of 88.7% for the week ended April 1st this year. So a big drop in the past few weeks. Also, it has decreased in 11 out of the last 12 weeks. The number of price drops compared to last year has decreased for 11 out of the last 12 weeks. So these smaller increases we have been seeing, especially compared to the first half of this year, is mainly due to two main reasons in my personal opinion here. So number one, home sellers could be listing their houses more in line with current market conditions. In other words, we have fewer home buyers compared to 1 year ago. And of course, our housing market has been slowing down big time compared to 2021, and of course compared to the first half of 2022. So that's number one. Number two, this could be due to declining inventory levels. In other words, a lack of houses for sale, historically speaking. In other words, fewer options for home buyers and less competition for sellers, leading to bidding wars again in some marketplaces. So that was the number of price drops. Let's have a look at the share of price drops according to Altos. So for the week ended April 28th this year, the share of price drops was 29%, down from the 43% we saw in mid-November last year. By the way, that decrease in the share of price drops is entirely normal. That's our seasonal decrease we typically see each and every year. Also, this is something new that I have been talking about for the past, 1 or 2 weeks, is that the share of price drops right now at 29% is much higher compared to the past couple of years, but it's actually on par with levels we saw back in April of 2019. In other words, the share right now at 29% is on par with historical averages going back to 2019. All right, I know that was a lot to cover in today's video, so here's a summary and also some predictions as well. Number one, asking prices only increased by 2.4% last week, the smallest increase since May of 2020, right at more or less the onset of COVID. For comparison's sake, asking prices increased 6.9% during the same week of 2019. And number two, housing inventory rose by 35% year over year last week. However, though, it has been on a downward trend since November last year. Of course, it's normal for inventory to fall in the winter months, but it's not normal to see a decrease of inventory in March and April like we've been seeing this year. Also, as I mentioned, there was a small increase of housing supply over the past 2 weeks. And of course, we'll have to see if that trend continues, and I'll definitely keep you posted. Also, new listings have been decreasing by double digits for 37 out of the past 40 weeks, which of course is a very big problem here. This continued lack of new listings is causing inventory to stay at historically low levels, even though inventory is much higher compared to the past couple of years. So for example, there's approximately 52% fewer houses for sale right now compared to the same week of 2019. And number three, average rates for a 30-year fix, according to the Mortgage News Daily as of May 5th, is at 6.5%, up from the 5.6% we saw from 1 year earlier, and of course up greatly compared to the 3% rates we saw back in 2020 and 2021. Number four, the number of price drops from last year has decreased for 11 out of the past 12 weeks. The share of price drops is a 3-year high during that same time frame, but it's now on par with pre-pandemic levels. And number five, houses are taking longer to sell compared to the same week in 2022 for 39 consecutive weeks. Again, though, this is a lagging indicator based on closed home sales. Additionally, one more thing I do want to mention regarding days in the market is that days in the market has more or less been plateaued over the past 2 months, ranging from a gain of 17 to approximately 19 days compared to 2022. In other words, houses taking about 17 days to 19 days longer to sell compared to last year's levels. So let's talk about some potential huge changes ahead, given the fact we're having all this volatility in the housing market. And again, a disclaimer, I am not a real estate market fortune teller. So this is pure speculation, of course. Number one, average 30-year rates are only 0.88 percentage points higher compared to 2022. Of course, that equates to a gain of 0.88% compared to 2022. In late October last year, rates were 2 percentage points higher compared to October of 2021. Remember, back in October 2021, average rates were around 3.3%. Then by the time we hit late October 2022, rates increased to 7.4%. So actually, I should say that rates increased by more than 2 percentage points back in October 2022 compared to the previous year, which is absolutely insane. Which of course is much different now, given the fact that rates have only increased by less than 1 percentage point from last year's levels. Also, after an increase in rates by the Fed starting in March of 2022, that's back when the Fed started increasing rates from 0%, and they increased rates incrementally through May this year. So after an increase in rates by the Fed starting in March of 2022, the Fed has signaled a pause in future rate hikes based on their most recent meeting, which was actually last Wednesday. Therefore, we likely will not see mortgage rates skyrocket like they did last year, which caused a very sharp pullback in prices and demand. Now, I'm not saying that our housing market is without its challenges, though, because of course there's a lot of headwinds that our economy and of course home buyers are facing right now. So, for example, we have bank collapses, a lack of housing affordability, low inventory levels, elevated rates, as well as recession and job losses coming. Therefore, there's a lot of uncertainty in our housing market and of course our US economy as well. And number two, speaking of housing affordability, it's still a big issue, especially compared to the past couple of years. Also, over the past 1 month, it's actually getting slightly worse. Buyers looking to purchase a $450,000 home, putting 5% down today compared to early April this year, are going to pay approximately $100 more per month to buy that same house today compared to early April. This is due to average 30-year rates increasing from 6.16% to 6.5% as of May 5th this year. Additionally, at a national level, home sold prices have increased a whopping 8% over the past 2.5 months based on data from Redfin. And number three, early signs of home buying demand have been absolutely all over the place due to the volatility in rates so far this year. The most recent stats we have regarding applications for home loans to buy houses, of course, decreased by 2% compared to the previous week based on data from the MBA, which was published on May 3rd this year. However, when looking at pre-pandemic levels, looking at their data here, their purchase index was on par with the lowest levels going back to February of 2015. In other words, demand is still very low. Also, Redfin reported on May 5th that pending home sales fell by 17% from a year ago, yet new listings also fell by 23%. In other words, low demand is meeting low supply, so it's making it feel like some markets that it's competitive, given the fact we have a low amount of houses for sale. Also, the National Association of Realtors reported on April 27th that pending home sales fell in March by 5% on a month-over-month basis, and also fell by 23% compared to March of 2022. Also in Sacramento County, by my analysis here, 3 offers received is the average right now for home sellers listing their houses for sale. So on average, 3 offers received in Sacramento County. And also there's many sellers in which are receiving more than 10 offers. In fact, there's one pending home sale in which a seller received 60 offers on one single property, which is absolutely insane. But on average, 3 offers received, which may sound like a lot, but 1 year ago, the average was around 6 offers. So again, we're seeing a seasonal uptick in our housing market in Sacramento County and nationwide, but not nearly the same levels we saw back in 2021 or the first half last year. And number 4, sellers and buyers have exited the market due to a dip of new listings as well as contracts being signed as well. The lack of new supply, in other words, a lack of new listings since last summer has led to inventory remaining at historically low levels. Again, down by approximately 52% compared to April of 2019. If homeowners continue to decide that now is not a good time to sell a house, that will limit inventory levels and of course put upward pressure on prices further. Again, this seasonal uptick is not going to look anything like the first half of 2022. And number 5, I appreciate you guys watching this video and of course for supporting my YouTube channel. Hope you guys have an awesome day and look forward to seeing you on the next video.